Good afternoon, and welcome to the City Club of Cleveland. My name is Jan Roller, and I am president of the club. For the last 97 years, the City Club has given its podium to speakers with important and interesting messages. And the club continues to shine a light on Cleveland, our great institution, and its people. One of those individuals is our speaker today, Beth Mooney, Vice Chairman and Head of Key Community Banking at KeyCorp, a financial services company headquartered in Cleveland and founded in 1849. In her position, she literally heads half of the company, with 7 of the company's divisions, 8,800 employees under her leadership, and is one of 3 vice presidents and the most senior woman at the company. In thinking about Ms. Mooney's rise in corporate America, it is easy to see her as emblematic of a new book by Gail Collins called When Everything Changed: The Amazing Journey of American Women from 1960 to the Present. Collins shows that the role and place of women in society and within their families was basically unchanged for the 1,000 years before 1960, but that the last 5 decades have been transformative for the American woman. She recounts that at a pre-graduation party at Barnard College in 1960, girls who were engaged were handed corsages. Those that weren't were handed lemons. That no woman ran in the Boston Marathon until 1972, when Title IX was passed. And that a woman who dared to go to court to pay a parking ticket in pants was ridiculed by the judge for showing disrespect to the court, while recently a woman was fired from her job as a bus driver because she refused to wear pants. So Collins' book shows that we women have come a long way, and Beth Mooney is a perfect example of that progression. She hails from the South via her birthplace in Michigan. She graduated from the University of Texas in 1977 and received her MBA from Southern Methodist University in 1983. She then began her climb up the ladder, working for financial institutions along the way: Republic Bank of Texas, Hall Financial Group, KeyCorp Real Estate Inc., Bank One, and AmSouth Bank, always gaining more responsibility and bigger jobs. Ms. Mooney joined KeyCorp in June 2006 and has been credited with a 7% growth in loans and leases in 2008, despite a shrinking and volatile industry. She used a distinctive community bank model to modernize 2/3 of the bank's 985 branches, and under her leadership started the Key for Women program, which surpassed a 3-year commitment to lend $1 billion to qualified women-owned businesses. Since moving to Cleveland, Ms. Mooney has immersed herself in the community and serves on a number of boards, including the Cleveland Clinic Foundation, the Cleveland Orchestra, and Neighborhood Progresses, Inc. Ladies and gentlemen, please welcome Beth Mooney.
Thank you, Jan, for that very nice introduction. And thank you. It is a great honor to be here today at the City Club Forum for Free Speech. I think all of you know free speech has been flowing incessantly about the financial industry during this past year, and I appreciate the opportunity to be able to give you a banker's perspective on where we are and where we're going. There are still a lot of misconceptions, uncertainties, and reservations about the current state of financial affairs in our country. And although it appears that the recession is over, and I truly hope that it is, we are uncertain about how strong and stable the recovery might be. We also have many reservations about the transformational period that is still ahead of us, and whether the changes, regulations, and increased governmental involvement will really be good for our economy in the long run. By the time we're done today, it's my hope that I will shed light on at least some of these issues for you. That doesn't mean I'm here to say that everything's rosy from now on. We are, of course, still struggling as a financial industry and as an economy. But the current struggle is one for regaining our footing versus holding on for dear life. There is much more work to be done, and I hope we can move forward and do what we need to do in an environment of cooperation and determination, rather than the panic we saw just 1 year ago. And what a difference a year makes. Last year at this time, the financial world was spinning out of control. It seemed that nobody knew the full story, nobody really knew what to expect, and more frighteningly, nobody seemed to know what they were going to do about it. Shocking events unfolded with remarkable speed. Stalwarts of the financial industry were falling like dominoes, and markets stopped functioning. For perhaps the first time in history, the economists all agreed. Everyone's forecast was getting increasingly gloomy. We knew something had to be done, but what? Before we take a look at what was done in response to the crisis, I'd like to step back and review some of the most important events that occurred just a year ago. I think their pace and their magnitude is stunning when you sit back and have that reflection. Okay, as I'm sure you remember, early last fall, the news was getting worse every day. On September 7th, 2008, the two government mortgage giants, Freddie Mac and Fannie Mae, went into conservatorship. The following Monday, September 15th, Lehman Brothers, arguably the biggest domino of them all, fell. That same day, it was announced that Merrill Lynch would be sold to Bank of America. Then the very next day, Tuesday, September 16th, the government announced that it would loan $85 billion to AIG, which was on the verge of failure as well. Throughout that week, we saw debt and capital markets freeze up. Massive amounts of funds flowed out of the money markets, and the reserve fund broke the buck. In the middle of all this, on Thursday of that same week, then Treasury Secretary Henry Paulson and Federal Reserve Chairman Ben Bernanke made an unprecedented trip to Capitol Hill to warn congressional leaders that disaster was imminent. They implored Congress to enact emergency legislation to fend off the crisis. While Congress debated, the dominoes continued to fall. Within the next few days, Goldman Sachs and Morgan Stanley, the last two freestanding investment banks, were stabilized with an emergency approval of their conversion into bank holding companies. And Washington Mutual became the largest bank failure in U.S. history and was sold to J.P. Morgan Chase. Then on Monday, September 29th, the U.S. House of Representatives voted against the emergency legislation. The Dow dropped 778 points, nearly 7%, with the worst one-day decline in 20 years. As the week progressed, it was reported that Wachovia would be the next bank that would not remain independent, and it was sold to Wells Fargo just a few days later. And by Friday of that week, the House reversed course and finally approved the $700 billion Emergency Economic Stabilization Act. It is fitting that the word emergency was in the title. The financial industry was teetering on the edge of a cliff, and someone needed to give it a rope. Embedded in that legislation was the Troubled Asset Relief Program, known as TARP, which originally was intended to allow the government to purchase bad assets to get them off the bank's books and other struggling lenders. But it didn't end up working out that way, because 1 week later, on October 10th, the nations comprising the Group of Seven, or the G7 as we know it, met in Washington, D.C., and announced their commitment and solidarity to do whatever was necessary to shore up the world's financial markets. They introduced a plan for European nations to inject capital into their banks.